This video, I'm going to have a quick chat about Tesla and its upcoming Q2 earnings call taking place after the bell on the 19th of July. We will cover sort of what things have looked like over the last quarter, some of the predictions going forwards, and then looking at what we need to be looking for in that earnings call just to see whereabouts Tesla might go, because I think this is going to be quite an interesting earnings call. Let's look back and have a quick look at what was going on in Q1. In Q1, they managed to miss two of the key metrics in that earnings call. They missed initially the earnings per share came in at about minus 0.43%, and then revenue, a very slight miss, but a miss by 0.11%. What has caused all of this? If we have a quick think back, we'll look at all of the price cuts that Tesla put in for some of their different types of EV vehicles. You see that being reduced, but what have we actually seen? It has had a bit of a catalyst and it has created more car sales. So up to the end of Q2, we were looking at car sales beating forecast, 455,000 vehicles being delivered, and they came in at about 466,000. So that was a reasonable beat by about 11,000 more vehicles delivered. And that is up on 10% of the deliveries in Q1 of this year. And if we look back to the same period last year, that is a great 83% rise. Do we think there is some worry out there that margins are going to be missed because of these cuts? Even though they've sold more vehicles, there is a chance that they just won't quite come in on those margins. But I think if we have a look back, Elon has always been saying you need to have some short-term pain for long-term gain. And that's sort of what this whole approach of the price cut, I think, was all aiming at. And they really did need to do this with all the other EV companies coming on board. And it's starting to get quite a competitive market. So they did need to go potentially for a price point that was slightly cheaper to bring in more sales. And I think it may have been a joke, but I think at the previous earnings call, Elon had said, look, we could just give the cars away because they can make money through some of their other ways. If you look at the full self-drive software, if and when they get that fully up and running, they'll be able to charge a premium for that. So you can literally just jump in your car and the car drives you to wherever you want to go to. So it is all about the margins. Everything is about the margins. You've had good Model 3 and Y sales, and then lately you've just had the Cybertruck. And I must admit, I'm not a fan of it, but I know that there's lots and lots of people who have paid that $100 to get themselves on the Begsy list. Another big boost that they've had is the other companies coming on board and adopting their battery standards. So looking at GM, Ford, Volvo and Rivian coming on board and saying that they'll use those battery charging standards. So what do we need to look out for in this earnings call? Firstly, we need to look at that countrywide operating profit margin. So it's not just the EV side of the business, it's the whole profit margin across the wider Tesla infrastructure. So we also looking at that energy generation, storage, as well as some of the overheads that they have. New vehicle timelines. Obviously Cybertruck is coming online, but when is it actually going to arrive? And when are they going to then look at launching new lower priced vehicles? There were suggestions in Q1 earnings call that raw material prices were going to come down. Have they seen that coming through the supply chain? Have we seen that reduction? Let's see whether that gets mentioned in the earnings call. Profit versus the profit strategy. So that's what we're talking about, the cutting the prices, again, short-term pain for long-term gain. That'll be interesting to see whether or not that actually comes through and links back to Elon saying that, hey, we just give this away for free. And then let's see whether or not there are any updates on the full self-drive software. This could potentially be a major income stream for them in the future, looking at other companies buying into that software, and it then becomes basically a software as a service kind of package where they can sell that at a price and you just end up paying an annual premium, and it could be in any type of EV car or any type of future car. There are lots of valuations flying around out there. I've seen people talking about potentially, I think Cathy Wood looking at 2027 figures out to a figure of $3,000 per share. As we look at it at the moment, it's sat in around that 290 mark. If you look at some of those analyst websites, Simply Wall Street and Morningstar, they're coming in with slightly lower estimates based on what analysts are talking about, with Morningstar coming out at about $215 per share, whereas closer to 227 on the Simply Wall Street. So where do you think that Tesla is going to get to? Where is your price point that will make you a happy person? As I say with everything, before you decide to invest your hard-earned money, do your own due diligence. I'm just giving you some of the things to go and have a look at in earnings call. I think it's going to be quite an interesting one. Why don't you have a quick look at one of these videos that looks at some of the dividend stocks that I am looking at investing into at the moment. Love it if you could stick a comment down below, and thanks very much for watching, and I will see you in the next one. Cheers, bye.